Hello traders. Today let's talk about one niche of trading which is called prop trading firms. Well, what's the idea of prop trading firm? Well, we could go to Google and write what is prop trading firm, and then we will have like sponsored links from respective prop trading firms, and then we'll have best prop trading firm affiliate websites, like these kind of things which you see now, and then we will have, according to Google SEO algorithm, the largest prop trading firms such as FTMO and others. But what I could say from my perspective, these are firms which theoretically offers you capital to trade, which by name implies is derived from banks and hedge funds where they had prop trading desks. Well, in other words, back in the day, and still kind of in today, there were banks and financial institutions who traded on their own behalf. So what the investment banks did, they allocated money to traders, and traders traded their funds, or it was done by hedge funds. This was called prop trading. And then I wouldn't go to details, but the prop trading as we know it from like books like Liar's Poker or movies in the 80s kind of dried out, and it was nothing more than market making. And this idea took its own pace into world of online trading. And also I am here, well, narrowing down this story, but once internet and technologies became more accessible, they had an idea, why shouldn't we make our own prop trading firms? Because from one side there could be pool of capital which is searching for talent, then there will be some challenge which filters out good traders, and then good traders will be able to show their skill and get allocated. Sounds pretty neat idea, and actually it kind of makes sense. If you are a good talented trader but you don't have connections to Wall Street, what you could do, you could show your skill, show your consistency, show your results, and if people will see that you are good, you could get the money and you could make your money with way larger capital than you could have from your own savings. So that's kind of interesting, but in reality it doesn't happen like that. The reality is that, well, those prop trading firms work with very sketchy business models, because even if I just went to some affiliate website which showed me the best prop trading firms in 2023. So they had 5%ers, top step, trade the pool, funding traders, Liberty Market Investment, Fidel Crest, FX2 funding, fund next. Well, you get an idea. Basically they were all prop trading firms which offers you a business model like that, but you have to kind of ask yourself, well, how did they get money? Like, if there are like 100 people which are able to get $4 million, like that's $400 million. Here maximum capital up here is 150. This is not that much, but it has $2 million maximum capital. So also here, if it has like 1,000 traders, it had to have like $2 billion assets under management for companies which are not registered. What do you think? How they are able to do that? Because of some liquidity provider, but who the hell in their right mind will give them the liquidity, and they will be able to offer them or promise them reasonable safety that this liquidity wouldn't be jammed up in some bad trading strategies or whatnot? No, it doesn't happen like that. Actually, what happens is that actually these traders are playing very clever scheme. That's not scheme, it's just fact of the life. That here's the thing, most of the traders lose money. It's like there is always, when you look at broker statements in Europe, you will see that there's disclaimer that 70, 80 or 90% of the traders lose money. But here's the thing, if you are offering strict rules to filter out your profitability, that probability that you will be failing increases proportionately. So if you 80% of the traders lose money, then if you force them to trade with certain time or with certain profitability or consistency metrics, each of those metrics will magnify the probability of ruin. So in the prop trading challenges, I would say 99.9% of the challenges are worthless. So what do they make? How do they make money? They pocket the fees. And effectively all business of prop trading firms is to pocket these fees. So for instance, if we go to like largest and most premier prop trading firm FTMO, you could see that they have many layers of capital, like from 10 to $200,000, which is for the fee. You have to pay certain fee depending on your capital, so you are eligible for this challenge. But the fee they just pocket these fees, and all of these prop firms have these fees proportionately of your capital. And then we have those 1 or 2 verification models, because each verification also proportionately increases chance that you wouldn't pass it. So that's the thing, because if there is like minimum trading days, maximum loss in the various ways, it also increases probability that will you lose. So in other words, you are just having very high chance of not making any money, but just leaving the fee out of table. And prop trading firms have 2 options. Either they are actually giving real money and actually risking on their own behalf for those lucky few traders which passes the challenge, or they are simply pocketing the difference between money which they receive and money which they pay out. So if you have like 100 people who are opting for the challenge for $1,000, you could have like 100,000 in revenue, and one of these people are just passing the challenge and making some money, and they make 10,000. So the difference is 90,000. That's their business model. It's really predictable, it's relatively simple, and it's really consistent. Is it ethical? Probably no, but it's no worse. Here's the thing, this business model for prop trading firms is no worse than, I would say, big book broker or crypto exchanges, because those institutions also do some dodgy things to get naive traders money. So that's the thing, the trading industry is full of snakes and those who want to rip you off. But here's the thing, if you are skillful enough, if you have that skill in trading, and if you pass challenges, prop firms have to pay you out your profit, because this is actually beneficial for them, because they need some survivors and some lucky traders who made it, because that's increasing their reputation and increases the chance for other traders that they will be the ones who will make it too. So if you are smart, if you know how to trade, and if you understand that those unknown unknowns and those little dodgy things in prop trading firms, you could actually try your luck there, because if you will make it, they have to pay you that money. They just couldn't dodge you. But if you don't, then you are ripped off by their fees and their commissions, and they will live happily. So here's the payoff. Understand that this is almost a scheme, not quite scheme, but almost a fraud scheme. But if you're smart enough, you could survive and you could make decent money with way larger capital than you could initially have. So this is my takeaway from prop trading firms. Yes, they are unregulated. Yes, they are unethical. Yes, but their business model works, because there will be far more traders than that would lose money, so they would collect the fees than to make money. So their business mathematics will work all the time, no questions about it. But if you are good enough to be one of those lucky few which could make it and trade consistently, you could make awful lot of money. But the question is, either are you one of those 0.01% traders who actually could pull that off? That's a question for you. But here's my quick introduction in the prop trading firms. Let's see how this industry develops in the future, and stay tuned and wait for my next videos.